What's up, guys? It's your boy GP with DeOrganized Media, bringing you another awesome episode of Darth Charts, where we dive into the markets with our good friend Darth Dude, and he shows us a little bit about trading mindset, levels of interest, and all that in a bag of chips. I'm telling you guys, this is where it's at. If you're trying to learn the ins and outs on how to navigate the market, Darth is your man. He brings a lot of value to this ecosystem with the ways that he sees the markets. Talks a lot about how to identify down close and up close candles and everything in between. He is my personal TA, but everything on this show is not financial advice, and of course you should always do your own research. Right now we have him waiting on us, so let me turn the tunes and the vibes down just a little bit more so we can focus. Man, how about that intro, right? Perfect intro for a perfect chat. So let me share my screen with you, and let's get to it. So I'll share my screen, bring Darth in, and we'll have some fun taking a dive into the charts. So here we go. Where is Darth? Let me find Darth. Oh, Darth is right here. Of course I'm sharing it. Leave it to GP. Of course, GP. Darth, check. Can we hear Darth today? Oh, wait a minute. Can we hear Darth today? Darth, is your mic on?
Yeah.
Perfect. Let me see if we can hear you over here. Just doing a quick mic check really quickly, guys. Making sure that we can get another check from you. So let me hear another check from my good friend. Perfect. Let me see if we can hear you over here. Doing a quick mic check really quickly, guys. Making sure that we get another check from you. So let me hear another check from my good friend. Things that make you go, So I'm not sure I can hear you on the stream. That's one thing yeah, I'll shoot you the link, and maybe we'll do the screen share from here for your visuals. And I'll just shoot you a link to the studio. You can jump in and walk us through what you're doing that way. So tried this way, tried that way. It's about building the plane in the air. Give us just a moment and we'll have the good man on. I want to make sure that we have just your screen showing first, and I'll grab that link for you. Let me see here. Got that. I see you've already got your levels of interest put in as well. So there we go. Grabbing the link, shooting it over to you now. So there is that. And I will let you jump in. There we go. Boom, boom. And he should be here in just a moment. I'll stop sharing my screen so you can see my lovely face for a second. Here we go. Boom. I was gonna try to just do the charts from a different, but yeah, let's just try it this way and see if it's a little bit better.
There we go. Yeah, we were trying to cut out lag, but that's all right.
Yeah, it'll be all right. So, what are we looking at?
Hey, yeah.
Oh, wow! Look at that. Perfect. It's actually working very flawlessly right now. I don't know what
can you track my my mouse?
At 100%. Look at that.
Oh, sweet. Okay.
We're in the game.
Let's start by picking up where we left off last week, seeing how those calls played out, and go from there. So let's zoom in here. This is Tuesday of last week, so we went live, and we talked about how this double top here got baited, so we induced some shorts, stopped them out, and then price turned around on a dime, and it aimed right for the longs down here. So we had this level highlighted, and that got taken out on Friday morning. And then, as everyone is aware, Mr. Jerome Powell, sir, came and gave us an announcement of an announcement that basically worked as a bull trap to go up and shoot us straight up. So this entire Friday daily candle was actually comprised of like 1 hour. So I moved down to the hourly chart, and there's your 10 a.m. announcement straight from Jerome himself saying, maybe in September we'll have some rate cuts. But what this functioned to do is, I'm going to go back to the daily here. So interest right here, this gap is, here, 1 second. So check this out. I was looking for short entries after this news. So we hit our longs down here and went up into a premium of this range into this fair value gap on the daily time frame. I'm going to show you something cool. So when we switch directions and we're in a downtrend, up close candles will act as resistance to other up close candles. Look at that precision. So this candle from Saturday the 16th ended up being the point where we turned on a dime and reversed down to continue our reversal pattern. So last week, I covered like the market structure shift, and that's where we have a prominent swing that is taken out, then we retrace back into the range before continuing in the same direction. So this is a bearish market structure shift locally on the daily time frame. And that's what we saw here on Friday into the weekend. We came down, took out the longs again, and now the next thing I'm looking for Bitcoin this week is to see where this daily candle closes. If it goes all the way through and closes beyond the midpoint of this gap, I will be looking for further discounts, which we highlighted last week down here at the $104,000 range. So let's just put a fib on this range and see what we're looking at. So 111,000 right here. This is our fair value. So the midpoint of the range. Basically anything above fair value, we're looking for a premium to sell, and anything below would be a discount if we wanted to look for longs. And we talked a little bit about confluence last week. So right here at 103,883 is our 786 retracement. That's kind of our very, very sensitive zone if we're going to look for reactivity to the upside. And it also coincides with this daily fair value gap that I pulled from over here. So for the week on Bitcoin, I'm mainly looking to see where this candle closes on the daily in the next 2 days to see if we're looking for a deeper discount. And then here I will be zooming in for on like a 4-hour or even a 1-hour chart to see if we get some sort of reactivity and reverse. So that's an idea for Bitcoin right now. Let's go to Ethereum and look at the play we were identifying last week. So let's identify Tuesday right here. This is where we were live last. And I highlighted 2 points of interest, a weekly gap. So I'm going to zoom out and highlight this weekly fair value gap and its midpoint. And then we zoomed in and we identified a daily fair value gap and a deeper discount of this range from August 3rd to August 14th. So the first 2 weeks of this month. Now, what did we see? We saw perfect respect of the midpoint of this range. So fair value was good enough to turn us around. On Wednesday, we closed above the Tuesday candle. And that gave us a bullish engulfing candle. And then we retraced here. I'm going to pull the midpoint. See how this Thursday candle, after we had this bullish engulfing, it stayed above the midpoint of the bearish candle it just engulfed. That's a bullish signature. So we closed up here, it opened, it went down, retraced a little bit. Then Friday, we had the news driver from Jerome, and it went straight to the short stop losses at all-time highs that we highlighted last week. So on the weekly time frame, if a theoretical play had been made inside the top half of this weekly point of interest or this weekly fair value gap, that play played out perfectly to stop out the shorts. And then now after liquidity is taken up here, we're retracing now, and we could continue off of this candle. However, if we retraced into the range down here for more of a discount, I would not be surprised. So that trade played out. Nothing too high probability here since we're still in a premium. Obviously, you can still be theoretically long Ethereum looking for higher prices, but that's the example trade that played out here. Now we're going to go down to Bitcoin dominance next and just highlight what we were looking at here on Bitcoin dominance. So once again, I'm looking for the market structure shift. So look at something like this. This is a prominent swing low on the weekly time frame that was taken out here in July. Then we had this weekly fair value gap to the downside that just barely got tagged, and that was all we needed for Bitcoin dominance to keep dumping, right? So we're going to zoom into Tuesday, and last Tuesday was right here. So check this out. We're in a strong downtrend. So I'm going to highlight a couple of things here. One is this this bear flag right here, and we'll talk about when retail patterns are actually high probability in a second. However, let's look at this continuation fair value gap right here from Tuesday, August 12th. So Bitcoin dominance basically went sideways and then went up in here right to the midpoint and carried us straight down lower. So the reason this is a good thing is because we want Bitcoin dominance to fall or go sideways so that Ethereum can pick up steam. And then once Ethereum picks up steam, our blue chips will be next, and then alt season will be next. So the main thing I'm looking for is for Bitcoin dominance and Benjamin Cowan to start falling off so we can make way for alt season. And this nice little double bottom from here, December and July of 2024, that we haven't gone below would be my next point of interest for Bitcoin dominance down at 54%. So this would indicate that since everyone who's bought Bitcoin in the past 2 years is in the green, they're going to start taking profits and looking for more ROI versus, maybe hoping Bitcoin goes to 250K, right? They'd rather get a 2x from Ethereum or 5, 10, 20x's down in the blue chip altcoins. So this is playing out as planned, and we've got this nice juicy retail Rick double bottom and some people to get taken out down here if Bitcoin dominance keeps falling. I'll pause right there. Any questions? Are you able to keep up so far? Oh, GP, you with me? All right, we're going to continue. So,
sorry, dude. Could not hit that button to save my life. What's up?
Any questions? Am I going too fast so far?
So I would definitely break down everything and very, very.
Let's break down this bear flag.
What's a down closed candle, up closed candle, like rehash everything that we did like last week, like very briefly. So since we actually have the visuals now that are actually like what we are doing in real time. But other than that,
Perfect.
dude,
All
you're
right.
crushing it. It looks great.
Before we continue, I'm going to finish this thought with the bear flag in a premium. So there's retail patterns. Most of the time, they get hunted. All right. So it's like when you go to college and you do things by the book. If you do things by the book, you end up in a 9 to 5 working for money that gets inflated to zero, and then maybe you get the hope of retiring at 60. All right. So we already know doing things by the book doesn't yield winners. Same thing with retail patterns. Most of the time, they get hunted. I'm not saying you can't be profitable with them, but there are ways to identify when they're going to be higher probability and lower probability. So why did this bear flag play out with high probability when lots of times the bull flags get stopped out, or they don't always work, or you'll find that if I'm taking trades, I'm going to target the stop losses behind a retail pattern? So let's look at this range in Bitcoin dominance. See fair value right here, the 0.5 mark? Everything above here is in a premium. So if you're going to play a bearish pattern, it has a higher chance of playing out when the bearish pattern is in a premium. That means because you want to be able to sell at premium prices, you want to sell things when they're more expensive and then buy them back when they're cheaper. So this bear flag from this range was in a premium, and it played out perfectly to the measured move. And when I'm talking about measured moves, all I'm doing is measuring the impulse that created, like the flag pull behind the flag, and then I'm taking that down to the point where we leave the pattern and extending it downwards, and then that's your target. Okay, so let's say you saw this bear flag and then it played out and you missed it, and we're just going to pretend this isn't dominance and it's a different chart. That's where we're looking for continuation patterns, and that's when I start drawing these fair value gaps. Now, just as a refresher, a fair value gap is a 3-candle pattern when the wicks don't overlap. So we're going to draw a couple real fast. That is from this candle to this candle, right here, Sunday, Monday, Tuesday. Those 3 candles together, since Sunday and Tuesday's wicks do not overlap, there's a gap. There's an inefficiency in price delivery here. And then that gets traded back into and used as support and resistance, for lack of a better word. And then we see continuation. Now we see 2 more gaps here. We see 1 and 2. So why was this gap not traded to, but this one was? When we see something like this, where we have 2 fair value gaps in a row, this one is called a breakaway gap. And a breakaway is something we use to measure the strength of the trend. So when you see 2 gaps in a row, the first one isn't traded to, and the second one, the midpoint is respected before we continue. And by continue, I mean the most recent low is broken in a downtrend. So we make a lower high, right, lower than this high, and then we break the next low. That's your continuation, and you would key off of the most recent gap and treating this one as a breakaway gap. And that's a way to measure a strong trend. Now we have this, the trend continues, we make a lower low. We also make another gap continuing, and we can key off of the midpoint of this gap with stops above the candle that created it. So right here, Monday, Tuesday, Wednesday. Monday is the first candle that created the gap. So we're going to put a stop loss above the wick or above the upper end of the gap if you want to cut risk a little bit. But technically, the technically correct way to do it is above the wick. And then you would target 3 to 1. And that's a sample play off of a fair value gap. And we're using Bitcoin dominance. It's not even a price related chart. So let's go switch back over to Ethereum and zoom in down here on the weekly. So I've got a market structure shift highlighted. This is the algorithmic signature on how to find bottoms, where we have a prominent swing high. Now let's do this. And what is a swing high? A swing high is another 3 candle pattern. So let's pretend these are 3 candles. Make this bigger so you guys can see. A swing high is 3 candles where the center candle has a higher high than the ones adjacent. So this one from February 2025 on the weekly chart in Ethereum is a swing high, the most recent swing high in this downtrend, all the way down here. So when this was broken in June, that got tagged, and then we retraced. This is what you look for with a market structure shift and how you find bottoms. Okay, so we shift the trend, and then we retrace into a point of interest. In this case, the point of interest is a weekly gap right here, created in April into the second week of May. And we would want to be looking for an entry in the upper quadrant of this gap. So we're using this to measure how strong the trend is. And when the midway point is not traded below, that's how we can see strength in the trend. So this was our bottom signal for Ethereum. And then we go up here. So just like what we looked at on Bitcoin dominance, we have 2 gaps in a row. So when we have 1, 2 in a row without that first one getting traded to, this is a breakaway gap on the weekly time frame. And this signals super mega strength. Okay, so that's how on this week in July, when we closed, the close of this candle confirmed this second gap. That's how I could tell that we're going to beeline straight for the shorts. The first target being here, and the second target being all-time highs. So the continuation play would have been in July, say if you didn't buy the bottom or you weren't DCAing when it was really boring from March to April. Your next opportunity was in June, and then a continuation play in July, and then the one we highlighted last week that we had the entry on Tuesday, and then we delivered at targets on Friday. So that's kind of breaking down this whole trend in Ethereum on how you can use these gaps to measure the strength of the trend. And when you see a high time frame signature like this, where you have 2 in a row and the first one isn't even touched, that's signaling a very strong trend in that direction. So we knew that the shorts above this super obvious double top were next. This week came up here right up to all-time highs, baited it, came back down. When it closed, that's the end of this 1, 2, 3 candle pattern, making this gap. So when we break down the next candle, the weekly candle, we want to break it down into 4 parts. So look at the numbers up here on the top of the screen. We have open, high, low, close. That's the anatomy of every candlestick. So when we're making a weekly play, we're looking for the bullish candle to do open and go down first. Whenever we want a bullish to buy into a bullish candle, we want it to open and go down first, because that makes the wick of every bullish candle, right? So look at this one. It opened, it went down first, then it went up almost to all-time highs, baited everyone to chase, and then closed down here. This one opened, it went down, entry was on Tuesday, then it went up, took liquidity on Friday, retraced for the week, and closed. Now look at this one. We'll see, we still are early in the week, so it could either continue in the direction of the trend, or we could go lower and close below this candle. That remains to be seen, but that's kind of the breakdown of the high time frame trend on Ethereum. So any questions there? So we've got swing highs and fair value gaps combined with a market structure shift, or if you're familiar with other patterns, it would be like an ABCD pattern before going higher. And that's how we find bottoms, or if we miss the bottom, that's how we measure the strength of the trend and find continuation entries. So here's more evidence of price being fractal, except on the daily time frame. So inside of this 1 week breakaway gap, you can see we've got 1, 2 gaps in a row on the daily time frame, and the second gap was traded into before we launched, and then we did it again. Gap, 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 on as we continued our way up. So that's the breakdown of Ethereum. Now using that, let's go to stacks real fast. So we were here Tuesday last week, and I highlighted this bull flag, right? And with that bull flag, we have stop losses below it, which also coincides with this gap. So I said on Tuesday, I'm looking for the people who bought this bull flag and had their confirmation bias tickled and hadn't paid themselves in this run because we were expecting all-time highs. Like, okay, now if they move their stop to even, or they chased anywhere in here and they put their stop below the bull flag, they're next on the target list. And now we are in a discount of this range on STX. So we have this little kind of golden pocket, or green pocket, so to speak, in between the 706 and the 786. I'm just going to highlight that blue for buying. I'll move this a little bit. So in this range, we're in the discount zone that I like to find entries. Inside, below stop losses that just got taken, and inside the top half of this fair value gap. So if we're going to go up from here for STX, I would like to see these daily candles be closing above this midpoint at 60 cents, 61 cents. And that would maintain the bullish idea for what is basically this big old cup and handle on stacks. So you see that. I'm going to clean this up a little bit for you guys. Draw some more lines. You see the cup and handle right there. We're going to make it blue for bullish. So we're using our chart patterns down here in combination with the fib measuring tool to measure premium and discount. And this would be where I would be playing this pattern. Say we entered right here, stop below the bottom of the range, targeting the first target I would have would be 91 cents as we break the highs that made the pattern. And my second target would be this really obvious double top up here at $1.08. So once again, why would this bullish pattern be playing out in stacks right now? The reason is because we're in a massive discount. So your bullish patterns are more likely to play when you are in a discount of the range. And that's what I would be doing here if I were to play stacks, or DCAing if you're just holding a long-term bag. That's what I'm looking at for the moment. Oh, we got Landy in the house. Did I do it right, Landy? I pressed the buy button a few hundred times down here, maybe more. But that's what I'm looking at for stacks right now. And I would not be looking for lower prices as long as we respect this point of interest right at 60 cents. And everything is gravy above that point. So we're gonna delete all this and open up. How's that going, GP? Anything to clarify? Still clean. You can still see all my mouse moves. We're not lagging like last time.
Wow, dude. Wow, amazing, terrific. Drawing the retail chart patterns and explaining why the area, like the price action, and dragging people over the coals. Max Payne, all of that. Love
Right.
it. I love it. As far as fibs, maybe we could get a little bit just rehash a little bit about what these 786s, these the golden pocket, the 0.706, and all of that. Like maybe just rehash that from last week so we can explain exactly what how to pull fibs as well in the
Yeah,
style that
so
you use.
we went over the 3 candle pattern of swing highs and swing lows, right? On how to measure trend or read market trend. So we find a prominent swing high, the highest candle with 2 lower highs on either side of it, which would be right here in this impulse here. So let's break this down to 3 impulses. We have April 7th down here. We had an impulse all the way up into May. So 1 month bullish price action down here. And then we had an impulse down before we made a lower high. And then we had another move up before we turned around. So it's these individual price legs that I'm using to measure fibs with. Or if we were to zoom in like this, where I have this swing high measured out and how we can find the bottom. We broke this swing high, made a market structure shift, retraced into the range, and I want to get that, and bang. So since we were in a deep discount right here for this market structure shift, we only needed to tag fair value before launching because we're already in a discount. So we didn't need a discount of this specific impulse, but it tagged fair value on the dot right there. And then once again, I pulled over this gap, which the bodies of the candles, so based on a closing basis, we respected this point of interest, giving us further confidence and signal that we're reversing. And then also we had this order block or bullish engulfing candle, basically where this Thursday closed above the previous bearish day. That means on the next day when it opens, we would want it to go down first, look for a smaller time frame buy in this wick, and then launch up to higher prices. First target would be here, 77. Next target here at 89. Notice we hit this swing high and this swing high before retracing. So this would go into why taking partials is always a great idea. So you can catch the main move, get paid, secure your position by making it risk-free, moving stops to even if you're day trading and not DCAing. Because then, imagine if you didn't pay yourself at this swing high. Then you have to endure like 2 weeks of sideways annoying downward action before the next impulse. So from a mental perspective, taking partials is extremely beneficial, because then you can secure something, take risk off the table, and then all of this sideways nonsense it's less taxing because you've already been paid. So let's look here. Same thing. If I were to make this play, my first target would be at the top where I pulled the fib from. Partials there. And then second target, partials here. And then we've got another nice little double top up here. We've got a bunch of shorts at this level that are probably really confident about their shorts, calling for STX to 0001. So those guys will be really fun to stop out. Now, when I'm saying taking partials here and here, those are from a swing trading or day trading perspective. If where we are now in the macro trend of Bitcoin consolidating, ETH making new all-time highs, and blue chips likely being next on the table and going into alt season, my first targets for STX are $3, $4, and $5 above. So I'm prepping for that bag for alt season specifically. Now, let's talk about partials on the macro. When I say, like, do you guys have a plan, like a trading plan in place for alt season? I'm saying that because it's difficult to time the top perfectly, especially when you factor in all of the emotions and euphoria that comes with blow off tops and all-time highs. So my personal trading plan I have in place is to use the 80-20 rule and set a specific target to take 80% of profits so that I can get a certain dollar amount to pay whatever bills or make whatever changes that I'm trying to make in the next year or 18 months, however long this alt season takes. I'm personally setting that number in mind so that once I hit it, I can press the button, I can take money off the table, but also leave 20% on the table to counter FOMO. Because let's say we absolutely rip faces and we hit $3, we hit $4, let's say we hit $5. Okay, well, I'm going to use that as my example for this. I want to take 80% of my bag off at $5 and then leave 20% on just in case alt season goes crazy, it gets extended, and we flip out to 10. If I had taken, in this theoretical example, all of my bag off at $5 and then watched it pump for 2 more months, that would be excruciating. That would be terrible FOMO. So I'm personally using the 80-20 rule to scale out of positions on the way up, just like we've been DCAing and buying on the way down, so that we can counter the most difficult aspect of trading, and that's the psychology part and timing tops, which is difficult. I mean, I can show you where the reversal pattern is in Bitcoin last cycle, and we can try to look for it in stacks. But that's going to be my personal play, is to set a number in mind while everything's calm and boring right now and there's no emotions affecting your decisions. Like, what do you need to pay off the car, the house, whatever changes you're trying to get out of the bull run this cycle. Have a number in mind. That way, when you see that number, you can take it and be successful, and then everything else is a cherry on top. So that's my personal plan for trading alt season. Um, what are your thoughts on that, GP?
Send it. Send it is what I'm saying.
Send
Fire
it.
the job.
Yep.
Just send it. Simple as that. Send it. If you could just send, can you send it? Can you hit the button, the big red button that says send it? Like, is that possible?
Hmm.
Does that happen?
Yeah, yeah. I'll just
Yeah.
Landy's in here. We'll get him to press the button and we'll just launch it.
Right. I know that whenever Land, the sweet dark dude jumping you into the club GP. Me and Dark Dude come from the same club. That's where I learned my stuff that the little bit of stuff we did this before Landy. I learned the same in the same place Dark Dude did. So Dark Dude just had a different mentor within the same place. If
Yep.
that makes sense. So it's
So
just um but yeah, like you thinking a little bit of chop sideways for a little bit because I am going to be completely transparent. I was in three different places at once. I was helping a user with his gas fees, and then I was going to cook for the old man, and then I came back here and played like I've
yep.
been here the whole time. But that's the specialty.
Yeah,
I'm
I
good
mean
at
that's
that.
the
So
gist of
what
it.
what was it that you were
Yeah,
touching
so
on last?
aside from all the technicals and the points of interest, which may or may not be respected, we could go sideways for another month into Q4. Um, I'm looking for the psychological element. I am looking for it to just torture everyone at the bottom. I mean, look at this long and slow bleed
Yeah.
out right here. It's boring, it's boring, fake pump inducing longs, and then boring them to death, finally stopping them out, and then going sideways and boring them to death. This is on the weekly time frame, by the way. Maximum boredom, maximum constricting of liquidity, and then boop, maximum
So
FOMO.
go enjoy your summer is what
Hmm.
you're saying. Go enjoy your summer for a little bit. See you in September when it starts to
Right?
cool off in the
And summer, or it's the perfect time to
U.S.
build when no one's watching.
That's the beauty of our ecosystem is that all of our in stacks STX, right? Everybody's building and shipping new alliances are being formed. And I think that our builders are very based. They're talented, and I can't wait to see what type of new D apps are spun up. After a few months, right? They've been teasing some like some BTC vaults with Hermetica, and Zest and Stacking DAO are always trying to push and be at the cutting edge of innovation. So I think that right now it makes sense for the coals to be right there and our backs being dragged
Hmm.
across them. Right, I can picture it just like, ooh, Max Payne, Max Payne. This is Max Payne. We're gonna turn
Yeah.
around and go up now. Max Payne. Okay, it seems promising. We've got rate cuts. Max Payne again. Um, I don't think we've seen Max Payne yet. Not enough people have
Right.
capitulated.
Yeah, that's what it's doing. It's boring everyone to death. They gotta sell or exit, or they lose faith, and that's why I call this the believer cycle. You just gotta just believe in your project, whatever you're in. Um, Obviously, lots of other things are working out, but it's gonna bore you to death until it rips in your face and gives you no retracement, and that's what altcoins do. It's maximum sideways and then maximum FOMO, and then 90% retracement, and then they do it again. So that's what I'm looking at from that end.
When the bid comes, when the bid comes, it is
Yeah.
violent.
Oh yeah. I mean, look at these months. We had, right. We turned around in September of 2023. 2 months right here, and then 4 months of just nonsense. And that's why, you get all. Once this happens, you're gonna be like, dang, I had 8 months to build a bag down here. Man, I wish I had more. And then here,
Right,
you're gonna be like,
right.
holy cow, $12, let's go. And then if you don't pay yourself or take partials, you're you're stuck buying 350.
But,
And
hey, I was one of those ones that was buying $3 and 80 stuff and still feeling like I got a
right,
deal. So the fundamentals have only gotten better. The community has only gotten stronger and more innovative. I'm excited, man, especially since we've got things like GameFi being developed, proof of sale systems, whole circular economies being built on top of Bitcoin via stack. So like I feel good, I feel promising, and seeing a lot of new leaders step up to the plate to teach is the biggest
right,
signal for me, right? The more people that are educated and have this basis of knowledge that you are teaching right now, the more we can make them successful, the more powerful they become, and the better. They don't have to worry about getting funding if they can just go and learn how to trade a little bit here and there, and then build a bag and know when to exit and then know when to enter and stuff like that. These are powerful tools that you're
right.
teaching
And
people,
yeah,
right?
it's just like having the
So
mindset of
it's admirable.
like, if you want to learn how to trade, just treat these candlesticks like a language and give yourself, you know, a year of immersion to study the language. And then you can
I
read it like a
really
book.
love that. Oh, that is a clip. I love that the way that you put that. The charts are a language, and then, well, just like with any new language that you're trying to learn, it's going to take some time before you get your bearings and you speak
Hmm.
it fluently,
Hmm.
right? So I really loved that metaphor that you did there. Um, bravo on that one. That was a good one.
Right,
That should
right,
be on
yeah.
a shirt.
But it's yeah, it's all now. Let's go over like narrative. It's it's easy for I think I made a post earlier. It's like the one thing that was the biggest change in my trading mindset was asking myself, would I rather be right or would I rather be profitable? Everyone down here who's saying STX is going to zero or these coins are going to zero or alt season's dead, they'd rather be right because the evidence is there to support them. So that they've got the like, oh, it's only gone down and sideways, it's never going back up again. It's like, if you want to be profitable, you're not playing based off of the current price, you're predicting the futures. That's where futures trading comes in. You have to have a model to predict what's going to happen, not what is happening. And that's why, like, my trading strategy involves predicting where price is going to go, having three potential outcomes for, okay, it could respect this point, it could dip below, close below it, or it can go sideways, and then having a plan for all three scenarios and acting on it when the opportunity arises. Um, and then the other fundamental aspect of the markets is every single trade has two participants, and both of them think they're right until the market takes their money. So oh, I keep clicking the wrong. I can only long. So let's say someone shorted right here. All right, and they think STX is
Turbo
gonna make new lows, and they've got their 3-to-1 R set up, and they've got their stop above this cute little double top, and they think they're a genius because they've already gotten confirmation bias by the move in this direction. Their stop is right here. So my trades always have conditions for entry, a stop loss defined, and a target. And the target is the losers in the market. Where's the next batch of losers? $9. That's where the next batch of shorts are going to be wrong, and they're going to eat it. They've got money on the table, and no one made them press the button. They're willing to hand it to you at a loss in the form of a stop loss, and that's where their stop losses are. So it's identifying where your targets are specifically, and defining your risk reward with if you're day trading or scalping, 2-to-1's fine, but 3-to-1 is a pretty good sweet spot. So just having those targets defined, and a reason for it, the narrative behind it.
Is it safe to say that a lot of traders use the 3-to-1 risk reward
Probably,
ratio?
probably it's good. Some people are really successful with a high win rate and 1-to-1.
Gotcha. It's all about
Yep.
minimizing
And
risk.
then so like you see this double top before this double top. If I were to make this trade and we broke this, I would take risk off the table after these highs were broken, because once we flip this point, I would expect this to be the next logical target. So I would take risk off the table either in the form of taking off a part of the position that's more than the stop loss if I wanted to leave a wiggle room, or moving like the stop loss to entry while aiming for these targets, the targets that made basically this fractal cup and handle with a fractal cup and handle, right? With a fractal little cup and handle at the bottom. So we're in a bullish pattern, in a bullish pattern, in a bullish pattern, in a bigger cup and handle. So I did get a question about volume today. People were asking like, oh, so what's the volume on this or that? You'll notice I don't have volume on my chart. It gets in the way. I will have a hot take and tell you that volume has no bearing on price. So the question that I got about volume was regarding like NFTs or BNS. Volume is a lagging indicator. So let's use NFTs for an example. Let's say you launch a new collection and the volume is 0. You can't use volume to justify a position in that said NFT, or if your NFT just happens to be a wallet-enabled domain name. So volume has no bearing, because you can go from 0 volume to 25,000 STX in volume with one sale in low liquidity, non-fungible assets. So let's go over here. What I used this run up to, I was minting Giga NFTs down here, and in this run, price went from 50 cents, to 350. So it did a 7x. Well, let's call it just to $3 to make it a 6x and make the math easy. I flipped NFTs for 150x when price only did a 6x. And that has to do with, one, when the speculators are up here, they're speculating at higher and higher prices. So you can buy something for 5 STX and sell it for 70. And then the price appreciation underlying that with a 6x compounds how much you're flipping said non-fungible tokens. So when I say like time is really, really important, first, when in trading, that's especially important if you hold a bunch of NFTs or domain names or anything non-fungible, because you want to be accumulating at the time when people think they're worth nothing, and then selling when people are speculating, when people are buying $3 and aiming for 12. And that's how they will justify, and you can get 150x, 1000x returns on something that cost you $1 with only a 6x move in price. So the way I'm leveraging stacks without a liquidation price is through non-fungible assets. So I'm not leverage trading or futures trading it. I'm just stacking non-fungibles that have a higher speculative value in order to get potential 100x returns in a 6x price move. Does that make sense?
It's cool. It's cool to think that like a speculative asset, right? Like not only can you like mint an NFT and then get what people like the rarity is like the rarity factor of the NFT within the collection, right? And that is like purely speculative, what people will pay for it, and then you can get price appreciation ran right into that, like you meant for 4.2 STX, and then STX is worth 33 cents whenever you mint it. Sell it for the exact same price that you minted it for, but at a 3x because Stacks is now at $2 50
Mhm.
cents, right? So it's insane. There's a lot. It's a very dynamic thing, and I think NFTs are cool. It's a cool beta. It's an interesting beta on STX, which STX is your beta on
Right.
BTC.
Right.
So
Yeah. So yeah, any
cool.
projects built on the ecosystem that require like one more doorway to go through in order to get access to is essentially like is a leverage play. So, um, well, let's do this. BTC going here, then blue chips, then we get to alt season, and then you get your memes, NFTs, uh, etc. That all the things that are built on these projects are just one step further removed, or basically one more layer of leveraging liquidity. So timing wise, STX is gonna rip, like blue chips are gonna rip before the rest of alts rip, and then once alts rip, they're gonna rip before sales start taking off in the secondary layers within the ecosystem. So your meme tokens, yeah, NFTs and domains. Um, those are going to be afterwards. So timing is everything. So if you're trying to sell non-fungible assets right now, they're highly illiquid. No one, everyone's trying to sell them, and no one wants them. So people are luckily stuck with the bag. And then they'll be much easier to sell up at these massive speculative prices. And the timing is when you want to be listing them. So when we're making new all-time highs, yeah.
Especially if your Giga Pepe V2 gets you a custom in-game skin for holding, and then get you into a custom Gigaverse lounge, and then get you into a teleporter that can take you to the Giga Pepe spaceship, and then you're playing a third-person shooter, and then there's like some utility behind it. Just toot my
Right.
own horn.
Well, yeah, and the more of that'll be built out, and I mean that's how Bored Ape got established. Is they launched the collection at the top of the market, and they established that those high ticket sales at maximum speculation, and that's how they flew off the shelf. If they had launched them at the bottom, then it would have been a slow mint out. They wouldn't have had celebrities buying them for millions and then whining that they went to 0 or 4 grand or whatever. But
Yeah.
yeah, so having
Well, they're the most purely speculative assets in the
hmm
market,
hmm
right? So it's a fascinating thing. It's just such a fascinating concept to me. I don't want to launch a token. I want to use my artistic ability to create something that I enjoy looking at, that other people might speculate and enjoy, and then build a basis of like cool stuff connected to it. There's a whole universe like that is connected to what I'm doing, and then finding new things to build with the technology. And it can be more than just
hmm
art, right? So I've always been fascinated with NFTs. NFTs were the first thing that I did in stacks. And then I discovered that you can stack your STX for native Bitcoin yield, and I was like, wow! So you can take this asset and earn real native Bitcoin, shipped to your wallet every cycle, every 2 weeks or
hmm
so. And then I learned about liquid stacking, and you're able to lock up your tokens while earning 10% APY in either auto compounding yield in stacks, or daily rewards in SBTC, which is a one-to-one backed wrapped Bitcoin asset that is completely decentralized. It doesn't use any federated system. So And then can't can't not mention taking profits into USDH, which can yield you up to 25% APY, right? Like take profits into USDH, go stake it on the Hermetica platform, and it's a Bitcoin backed dollar.
Right.
It's insane. And all of this was not available to us. Like this type of DeFi was not. These things that I'm talking about are first of their kind.
Mm-hmm.
You know, so I just think it's really interesting. I think the value proposition for
Oh,
Stack is
definitely.
there.
It's there. Yeah, check this out. This is total 3, so that the market cap of altcoins, excluding Bitcoin and
All right.
Ethereum. And I've been calling for this since since April. Um, and that so I kind of extended out this parabolic curve, and I drew this 786. I drew that, combined it with our point of interest on our fibs from this low in August 2024 to the high in December 2024. So we have multiple areas of confluence, being a deep retracement at the 70% level, a weekly inefficiency right here, which was respected, and then this parabola being drawn out, which we're expecting parabolic um, action from altcoins. So we had this. We went, broke a swing high, made our signature market structure shift, and once again, we had a weekly point of interest right here in terms of fair value gap, combined with the extended parabola, combined with the previous highs from April 2024. All of those came in, and we hit that in June, and we've launched since June and July. So now, if this week closes without taking this low, that will be a swing low, and we can start steadily gaining in the altcoin market as well. And right, obviously we've got here and here is bait, nice little double top. People think altcoin's dead, or we're going into another 3-year bear market. Well, we have got tons of shorts to stop out and buy back our bags higher. So if this down close candle acts as support and we don't break it below, that could act as launching us into September. Another potential could be September. If we want it to be bullish, we want to open and go down first. It could go down in this range, or we could bleed off for the rest of August and it dip down in here first week of September, go sideways for September, launch into October, November. That's also another option. But basically, in terms of altcoins, that's my point of interest, which the midpoint has been tagged and respected. And if that fails, then this would be what I'm looking for in that sense. But yeah, I want to go to the chat. If anyone has a specific altcoin they want to look at, throw it in the chat. We can pull it up. But that's kind of the gist. Oh, I did have. Let me change. Oops. I'm switching tabs real fast. There we go. Am I back?
Oh, you're good. Let me just double check to make sure that I'm looking on the stream.
There we go. So
There you
we'll end this out with a little sneak peek of a day trade I did on Monday. So I was back here in Monday, and we have this super big obvious bull flag. This is NASDAQ, by the way. See this big giant obvious bull flag that that literally everyone was drawing. It slowly bled out. This is a 5-minute chart. Slowly bled out and wrecked, right? So let's take a look at a trade I took on Monday. These trades I take on NASDAQ are also time-based, okay? So I don't live in New York time, but you can see down here, time zone is UTC4. All my charts are set to New York time because the charts run algorithmically off of the New York Open. So I have two things here. I have this impulse from here to here on the 5-minute chart I was watching. So I saw this low and this low I had highlighted as a double bottom for people who are expecting a reversal. And that's too smooth, so I'm expecting everyone who's right to get stopped out before the move. And I have this 5-minute inefficiency in a premium of basically this range. You see that? So I pulled that fib bearishly, so my 786 is up here now. And so there's a
Oh, so you can pull the fibs the other way.
So from this wick, it's at 6:30 a.m. to 4:35 a.m. is the range I pulled. And well, I didn't use a fib, but I'm just using it for example to highlight the premium. I just looked to the left, saw that this is our premium inefficiency, pulled that over. Let me kind of go 1 minute without it resetting everything. Here we go. So here's 929. So charts opened. It went straight up immediately at 9:30, inducing longs because they have their stop losses below this double bottom. So I shorted the 5-minute time frame, had a stop above this high right here. Let me highlight that. Stop is above this high. Targeting here, the super obvious double bottom. We got a short, and we had an exit for a 60-second workday. And that's just an example of a time-based entry stacking time frames. So I pulled a 5-minute time frame, changed to the 1-minute chart, waited for a very specific window of time, took this trade, and then went and did whatever I wanted for the rest of the day. And none of this move mattered, right? And then it chopped everyone out, got speculators on both sides of the market, and then finally went first to the shorts. They got stopped out, 1050. And then, right, so some of these super premium stop losses for shorts also got stopped out up here. Before chopping everyone out, check this out. So time is the most important aspect when it comes to trading. You can't just go in and find your model at any time of day and expect it to play out. For example, look, this is what I call the lag switch. So you see right here, 1150. This is going into the New York lunch hour. So New York goes to lunch, and then it's just chop. It's taking people out both ways, left and right, and then right here, boop, 1 o'clock, we break the range. And then retrace, look. Break the range, retrace into a inefficiency or a point of interest, a sample trade. I wasn't in front of the charts here. Sample trade would look like this. Entering, oh geez, at the midpoint or just below, and then look right here. See how we broke the range but also baited a double bottom here, 1, 2. So we broke this swing low, retraced, gave an entry, and then aiming for a double bottom. There's your 3-to-1 R from 113 to 140. 20-minute trade example. But this right here, this is an example of you can't just enter at any time of day. Sometimes, some people call it accumulation. I call it a lag switch. It's just generating orders on either side of the market. And now we've got super engineered liquidity up here, right? It created another double top before reversing, going down here, and now we'll just be pulling this double top as targets at a later date. But that's just a quick insight in the NASDAQ. Same kind of logic, same kind of narrative. Is just identifying the losers, using time to enter, and entering based off of inefficiencies and targeting anywhere in the market that's really smooth price action. So anything that's super smooth that it's obvious that people are going to be putting stops behind. But
So what do you see for total 3, right? Like I saw you had it on that parabolic curve. You seen a little bit of a pullback to, maybe like 998 billion. Like where are you seeing? Like what
well,
level?
yeah, I highlighted the 2 levels, so the midpoint of this down close
All.
candle
Right.
right here at 1 trillion, which we just tagged this week and then recovered off of. So let's zoom in on the daily. All right, so we're going sideways, right? It's going to go sideways. It's going to chop around.
That's mainly, yeah.
Mm-hmm. So you see here, bouncing around, making a bull flag, stopping out the bull flag, coming up for the shorts into a premium, going lower, stopping out these guys, then reversing. So that's kind of what I'm looking for is, chop out the rest of this month. Once the month switches over into September, if we want a bullish month, we want to see the first week go down. See this low and this low, kind of like a double bottom here. So if we chop out, make a wick into the first week of September or the first 2 weeks of September, then make our reversal pattern, that would be something theoretically. But if this were an altcoin, I wouldn't be touching this chart because there's no high probability entry yet. I would want a discount and then a reversal signature. Does that make sense?
Yeah, we need that reversal John Hancock before we could do anything.
Right, and then this, and that would be our market structure shift.
Gotcha.
And then this would be your discount of the range from here to here. So here's that midway point from this range. So anything below there,
dip down into the discount, go back to premium.
Yep. And that would be the idea. And then this would be your protected low that you don't want to see alts go below 755 billion in order to maintain market structure.
That'd be super bearish if
it
went down there.
Yeah, that would be.
Wouldn't it? Yeah, super bearish.
So that's what I'm looking for.
Got a little bit more time before up, right? People are saying, hey, Fed rate cuts in September and stuff like that. That's not the only thing that dictates what happens. That is one of the catalysts that people use to trade and, like push the market to where the liquidity is, But yeah, you can see there's areas of interest below. Above, you need to pull fibs to get extensions, right? So it makes sense. I get it.
So I mean that's about it.
But you're not 3 years bearish.
No. No, I'm still pressing I pressed the buy button on it. STX 1800 times.
Let's go.
Yep.
Let's go. So we are getting about that hour 30 minutes mark. We are getting to like the last 10 minutes. Is there anything that you did not cover that maybe you'd like to cover? Charts, mindset,
That's
any other tools that you may just pop up once in a while that you don't really necessarily use every single day, but you might just on a blue moon just be like, hmm, let's look
um
at that.
that's it. Those are the things I look
DRPP.
for in the markets. I look for prominent swings and then fair value gaps, right? Premium and discount. And then for extra
Beautiful.
confirmation, it's having targets. So for let's like break this little leg down from here in June on the daily, we have this impulse, and it's just the same thing because price is fractal.
So for for any of our good friends that are in other big alts, right? Like BNB hit its new all time high, right? Last week or earlier this week. You want to kind of break down a little bit of BNB or like ETH also hit a new all time high. We covered ETH. Um, we can look at BNB for a second for our friends, and then maybe look at Sol, and just
Yeah.
kind of take a quick look at those, just like a once over real quick, since we have a couple more minutes, just for our friends that may want it, right?
So this is in all-time high territory. I
Right. So I'm buying, right, and then selling whenever it
Yeah,
goes to the bottom.
and then you blame everyone
Oh,
for it being a scam.
yeah, and oh yeah, and then I get on crypto Twitter
Yep.
and
Yeah,
troll,
that's what you do.
right? That's okay.
Yeah,
Got
that's the way.
it. Understood.
But yeah, no, I just pulled a fib from this kind of continuation impulse. We had respected a key level, and then I added standard deviations uh, for targets when you're in all-time high territory. So I would do that, and then yes, I would pull something like this, and kind of be using these extensions from this previous range to have profit levels.
Extensions. So probably a pullback in the near future, maybe. Do you see any like direct price targets that you would look for if you were speculating on BNB?
1,000 is going to be the
Okay.
that psychological level. So front running that by $10 would be
Right.
smart
Okay. So
because it wouldn't be
okay.
I it wouldn't be unlikely that it goes up to 985 or 995 and then turns around and people were waiting for the psychological level and never gets hit. So, but otherwise, yeah,
Right. Yeah. Like they were like it like had it like ingrained in stone in their brain that it's gonna be $1,000. That's where I'm taking my profit. It's
mhm.
going to happen.
But otherwise,
Gotcha.
we flipped this. So this is now an order block after, um, right? So we had a breakaway on the weekly time frame, then a continuation gap. Top half was respected. Down close candle was flipped, so I'm pulling the midpoint. My two areas of interest for this midpoint. Um, Look at that quadrant. So I just, instead of measuring the midpoint, I measured quadrants. So look at that. After this week closes, you'd be looking for something below the top of this down close candle right here. See how price did this, and this is what you call a balanced range. So this is a price imbalance or an inefficiency when you have a fair value gap. But when it retraces to the previous wick, to the tick, like that, and it overlaps, that's balancing. So it's offering prices. It offered prices to the upside here. We flipped it, and then it offered prices to the
Right.
downside here. Now this is a balanced range. This is efficient price delivery.
the balance range? Does it have to be the candle next to it and the one uh, previous candle, or can it be like say on STX? I saw something on the weekly and drew a line to exactly where we wicked to. Where was it? It was on the daily. We wicked to a certain range, and then I rolled over to the left, and it was like directly on top of the wick somewhere.
Do you have a date?
I know that's really vague. Let me see if I can
Yeah,
scroll it
what
up real
date?
quick. Uh, I don't. I
Mhm.
don't see what I was. A date. So there's a wick that it hit to a T. Sunday, the 6th of April. The 6th of April, all the way over there on the daily time frame. That's where we wicked down to yesterday, around 61 cents, and it just hit that wick like perfect. I don't know if it had anything in common or if there's a reason why
You
it
looking
did
over here?
that, or let me come back over. Yes,
Right there. That's a
exactly.
good spot. Let's mark that.
Yeah, that's the wick I'm
So
talking about. There you go. See how it wicked down, and it's immediately in the middle of that fair value
mhm.
gap as well. Does that have anything to do? Is that like a balanced range now, or
I mean, I would be looking at
is it too far
this
out?
this block of candles right here. So this last
So that
bearish,
makes more sense to look at that.
mhm, that's what I'd be looking at, and it's basically the upper quadrant. So lots of confluences within this discount,
Okay. Yes, I mean we
basically.
hit it. We hit that midpoint that you called last week to a T. That we were looking for it to respect. If not,
Mhm.
I think I believe you were looking for like 52 cents, something like that. Um, why
That's
50?
our protected point right here.
Right. Okay. There you go.
Mhm.
That's all I wanted out of you is like protected range 52 cents. Please. Let's go.
Yep. So you can kind of see how we have 1, 2, 3 lows in shifting trend, right? And that's, you can go back to total 3 uh, on the weekly. 1, 2, 3. We have this one here. So we're looking for that next higher low on total 3,
Oh, totally random.
right?
Totally
So
random.
yeah,
Right.
that's kind of the gist of it.
I love the way that you take what may be perceived as random and make sense of it. Thank you.
But yeah, that's what we're looking at. We got shorts that think they're right, and they've got money on the table. So I'm positioned to shake their hand and take it off the table.
Awesome. Awesome stuff.
Yeah,
I love a discount. Even if the discount takes a little bit longer, then it just gives people a little bit more time. The ones with real conviction to accumulate. So
yeah,
it's
exactly. It's like, these are Black Friday prices. That's what the 786 is. It's like when there's Black Friday and your favorite plasmas, 75% off your plasma screen TV. Like, you don't walk up to the store and sell your TV for 75% off. You buy 4 of them. And then you wait 2 months and then you sell 3.
damn. It's another good
That's
analogy.
right. That's the 786.
786 are juicy. I've heard of traders using the 886 as well for confluence. What do you think about the 886? Is it just
Yeah,
another way to look at it?
like for altcoins, yeah. That's um I think I have it here somewhere. Let's change that color. What do we want to call that? We'll
I
do
think
it blue.
teal, purple, blue. Yeah.
Look at that.
Wow.
That's random.
Super random. That's crazy random. To a T. Wow. 887 there. Huh?
Hmm.
From top to bottom.
Yep.
Love it.
Oh crap.
Love it. Love it. Love it.
Yeah, let's see if that's even more accurate.
888. Yeah.
Look at that.
Like in the lifers, it was like 888. Like I think 886 has been thrown around. 887. Like there's just a
So
little fraction of a percent off, right? Like
yeah,
but look
I'm
at
looking
that.
at this low
888.
right here. 61157, and this is 61169.
It's insane.
So we're talking about a 10,000th of a difference.
And it's perfect. It's like that's so
Right. So yeah, in that macro range, there's more perspective. Let me delete this. So I pulled from the low here to the high, and there's your 786 at 98 cents. So everything below 98 cents is so having that like mental uh, number of $1 STX, everything below that is super fire sale. So, and then yeah, there's your 888. But yeah, that I don't want to keep everyone too long. That about wraps it up, and we'll hit it again next week. And yeah, to reiterate, it's boredom until it's max FOMO, and that's why I want to just stress that have the dollar amount that you want to exit in order to make your changes in the physical, so that you can be positioned for longevity for the next 3 years to keep building. Because alts will dump for 3 and pump for 1, and Bitcoin does the opposite.
badass, dude. I think that every time that we've had conversations over the past couple of years about charts, there have been more times than not that you're just like spot on. So it only makes sense to really like get involved with you, and do some educational material, right? Where can they follow you at?
Yeah, I'm on the Twitter at DarthDude73. If you liked that little sneak peek about Nasdaq, you can DM me. I'm starting to do some private lessons in that field, so let me know. And yeah, I was like everyone else last bull run, and here I got in Bitcoin and Ethereum when it broke the previous cycle top at 19K, and I was in for this. And then I'm like, wow, I'm a genius. I'm going to learn how to trade and be a cowboy. And then I'm like, okay, I got to get out of the market. So I got out here and I spent from here, well, to present, um, actually learning with a mentor, learning how to trade. Because the reality of the trading education is that it costs as much as you let it. So you can try to be a genius and go and pit yourself against the biggest money and the smartest money in the world in these markets, and do it with live funds and find out real fast. Or you can get a mentor who will tell you to paper trade and practice your strategy and pay attention to your mindset before you actually have an idea of where price is going before it goes there. And then, only then, should you put money on the table, in my opinion. Like, why else would you put money on the table if you didn't know where price was going with a high degree of probability?
I agree. That's why they have paper trading accounts on trading,
Exactly.
right?
Yeah, paper
That
trading
teaches that.
is free on TradingView.
So go use the tools that are available. Darth, I did ask you a question here. I wanted to know if you wanted this um, do you want me to tell them where to find you? Are you hiding from the
Yeah,
world?
yeah. DM me on X if you're interested.
So
And
here you go. It's follow Darth Dude 73 on X. If you want to stay in the know and learn how to navigate the markets with expert precision, you heard it from the man himself. His DMs are open.
yep.
Love it. Love it.
Sounds good, guys. Thanks everyone for tuning in. And yeah, that's why not be precise? That's what we're here for. The heck with moving averages. Being average is lame.
I love it, dude. I love it. I think that a little bit of roasting here and there is good for the spirit, and moving averages aren't for everybody. I agree. I might still have them on my chart, but maybe in the near future, if I keep tuning into dark charts, I won't need them anymore. So, thank you for coming through and schooling us and as Landy likes to say, jumping me in to the TA game. Yeah, it's a dark dude jumping you into the club GP. Let's go. All right, Darth. Well, I shall
Awesome.
see you on the flip side, good friend.
Yeah, we'll see you guys on Art on Stacks, I believe.
Yeah, Art on Stacks about 20 minutes.
Awesome. Have a
All right,
good day,
guys.
guys.
And this has been an awesome edition of Darth Charts, the second episode where Darth breaks down mindset, how to navigate these down close, up close candles, sideways close candles, everything that you need to know about navigating the market with expert precision. Be sure to follow him at DarthDude73 on X. He is open for this DMs. Just hit him up. You have a couple questions that you'd like to ask him personally, or if you'd like to jump into his Discord or have a private lesson, he is open to that, and definitely a huge value add to the squad. So dude squad for the win. I hope that you guys have a blessed rest of your afternoon. Be sure to tune into the Art on Stacks going down in about 20 minutes there. So go over there, head over to Reese SBTC. And tune on in, guys. We're having fun, and don't let the coals get too hot and get to you. Everybody's in the kitchen cooking right now, and we're exactly where we're supposed to be in the market cycle. So have a blessed rest of your day, and we shall see you on the flip side. Tune in again on next Tuesday at 1 p.m. ET for another awesome episode of Darth Charts. Peace.